Hey guys, I haven't done a video for a while, so I'm just going to talk about some of the stuff I talked in the room today and maybe add a little bit to my conversations and stuff. I think potentially we are in a lot of trouble with the technology. We have to really keep a close eye on that. As we know, Monday we're gapped up to all time new highs on a very poor volume profile. Okay, this is a P formation into all time highs. This is not supportive of higher prices. Typically you want to go up with a typical bell curve on volume profile, especially in a breakout scenario, something like more like this, evenly distributed, just a slow, steady move up. No, instead we just rocket shipped up, and I think because of the tight consolidation that we've been in the Qs and in the S&Ps, that we found a solid wall of distribution where big money was selling into any further higher prices. Okay, so that is what I am seeing here. A lot of risk here. I'm using these fib fams and stuff. Obviously, we're on the bearish side of currently the current weekly trend. So I'm definitely keeping that on watch. Another way I looked at this that I mentioned in the room, okay, I inverted my Qs so I could do an analysis on the daily time frame. And basically, this is a long-term uptrend. So everything going down, that's an uptrend, okay? But I can use my fib fans to better show what I think is going on here in the markets. Okay, so basically, back in the October 10th, all of a sudden we crossed the midline of the trend. So now we crossed to the bearish side of the trend. So I found some selling pressure going into the 18th, and then they recovered it. And then we came back up to this midline and found solid resistance with solid distribution happening in the Qs. Okay. And what this one red line right here, that is your third line on the second uh, fib fan distribution. This is your potential breakdown signal for a bearish reversal on the charts, and we closed right into that line. Okay, I thought they were going to hold it for max pain going into tomorrow in the Fed. They were going to hold this purple line. They couldn't even do that. They took it all the way down. So now what they have to do in the overnight session, they literally have to bring the Nasdaq back up just to maintain that fib fan line. I do want to point that out, and that is definitely a very bearish signal. That's why I'm a day trader, but I actually do have some short positioning for the overnight session, thinking that we're going to completely destroy all of this weekly inventory. Going, we only got one day left, but I think we're going to definitely just completely destroy it. Probably get closed way down here at our best case scenario, closing way down here, and you know, whenever the liquidation starts, we could actually tomorrow, in my opinion, 363 is in the cards based on my technical analysis. So, two main takeaways I do want to have here. The trend off of my yearly support, these are yearly Venom lines using market webs. I got one here and got one up here. The trend, we literally broke out of that on the shorter time frame, suggesting that we are topping out here and that there could be some downside action on the shorter term trend. But we also broke a long term fib fan as well on our S&Ps. And I know it might be a little bit garbly joke here, but it gives you a little bit better idea. So we've been in a very strong growth pattern, and we're breaking down back inside of that fib fan as of today. So that is another warning sign that things are getting quite a bit weaker here in the markets. And I know I got quite a bit of stuff on there. I have told a lot of people in the room this is 200%. The blue line represents 200% off the 2020 lows. So everything up here I've been saying for a couple weeks now. I believe all that is a blow off top area for the S&Ps. And so basically, yeah, when we start correcting, I do think we're going to see a hard test, the 440.50 area here in relatively short order. I mean, we could get that tomorrow. I mean, whenever you have a blow off top scenario and things start liquidating, they can liquidate very fast. And that's why I am short overnight, because thinking there is a decent chance we're going to gap down tomorrow, despite even before the Fed says anything. Because I think right now we're having a technical breakdown issue in the markets, and really what the Fed, I think the Fed's just Jackson Hole. That's just a side note. When the technicals are starting to break down, the markets, all the algos, they're based on the uh, the technical setups for sell side pressure, and it has far less to do with the news. Okay, and that's exactly where I think we're at. Okay, two takeaways for Apple. We're below the midline on the secondary. Okay, on our fib fans on the longer term time frame and on the short term time frame. Now we're crossing below the mid line, so we got a dual potential for Apple to the downside given that charting scenario. So what I'm seeing here on Apple, this is leading the Nasdaq lower. How do I know that? Because the Nasdaq for this week, the developing volume profile is still up near the high of the weekly inventory, whereas Apple's doing the absolute opposite. We're breaking down out of already established value for the week, okay, and we're putting in value at the low end of the value for next week, okay. These dots represent next week's inventory value area develop breakout. So we're right here. We closed potentially breaking last week's volume. So this is value area low. So this is a leading indicator that Apple is leading to the downside on the Nasdaq. Another leading indicator we got right here. Microsoft took off early this week, rocket shipped outside, started building out value at higher prices, and all that value is getting rejected. So just keep that in mind going forward here. We're almost getting a total breakdown of the entire move on Microsoft. So this is a very basically we went up, come back down. So we're setting up for a doji or a what is it, falling star? I think that's what they call it, a falling star candle, possibly setting up here for on the weekly on Microsoft. So definitely a bearish scenario setting up here. So definitely keep this on watch. Very bad price action here. We're seeing it on Microsoft. Okay, some of these stocks just haven't fallen yet, in my opinion, and I just don't think the patterns had gotten themselves in a situation where they could actually start the falling process yet. Nvidia is holding out better than most in the technology space, but keep a close eye on this one here. But I think this one here is potentially setting up here in the not so distant future. Tesla's confirming a swing high breakdown pattern, so that's something I'm watching here as a potential lower high. We're putting in a possible lower high on Tesla with a potential target all the way down here in the 632 area. Yeah, for a full possible retrace of this pattern. So keep that one in mind. Obviously, lower high there. You're targeting a lower low to complete that cycle on that one. So tomorrow, some things I'm thinking about here. I think the markets are going to break down lower. Facebook came in today, but we're still into my support areas. Okay, so basically, we start breaking tomorrow's lows. I think Facebook can actually sell off pretty hard, and it can even though Apple and Microsoft are leading to the downside up till today, you're going to start seeing other breakdown patterns starting to emerge, and Facebook is one of them. And then I also have Google. I think Google's a breakdown pattern too. Uh, so keep this one on watch too. You can just go right here with your fib fans and draw it in there, and we'll see how close it is here. Right there. See, yeah. See how that candle did that right there? We're starting a possible breakdown pattern in Google. Or that's a very early indicator right there. But possibly even that's going to lead. So I'm thinking the telecommunication area will be the next leg to start breaking down pretty quickly here. So keep that one in mind. So relative downside in Apple, Microsoft might rate the rate down. Will probably be a little bit slower than what we're going to see in other areas of the tech area if we do get the next leg down, in my opinion. We've got Amazon. Actually, uh, it was trying to break out of a downtrend, which could actually turn into a longer term consolidation. On the shorter time frame, it's actually showing that it might be getting rejected. So keep an eye on this one here. That one actually was trying its best to break out, but it just couldn't quite do it. So if the markets were to catch a bid, Amazon's actually trying to put in higher prices. I don't want to say absolutely positively the markets are dead yet. So, but yeah, that's one. Netflix is another one. Is looking fairly good. The outbreak and everything is really bad right now. So Netflix looks like it's trying to. It's putting in a lower high right now, a potential lower high on Netflix. So, but it is trying to digest and possibly go higher. So keep that one on watch. Then my Goldman Sachs potentially breaking down into a new trading zone. So heads up, we looked up above, possibly coming in tomorrow. Got that one on watch. J.P. Morgan, same thing. It already broke. J.P. Morgan tends to lead financials, so we pretty much got a what do you call it, a pipe top. So we got two 1 hour candles right side by side. That's a pipe top topping pattern with a double top scenario going on with J.P. Morgan. And my favorite is Boeing. That's everybody knows I love trading Boeing. Very bearish chart. All the COVID news. It's in a confirmed downtrend and it continues to go down. And so now with this breakdown here on a lower high, so this is a bear flag continuation pattern. Now I am targeting 190 a share. So keep that in mind here. My ultimate target's down here. So definitely not. This is a very ugly chart. So definitely what's going on with all the COVID outbreak and everything, and with the bombings going on in Afghanistan and just a lot of turmoil. It's weighing on the airline industry. Okay, so that's a few of the charts that I'm looking at right here, and I had another one here like Moderna. Oh, Moderna's here too. Moderna, yeah, it's holding out fairly well with all the news going on in that front as well. Okay, so that's just a few things I'm looking at here. Oh, IWM, we can look at that one. Instead of me looking for it, I'll just type it in here. The Russell, it was catching a bid under the guise that uh, interest rates were catching a bid. Tomorrow, I think there's going to be a flight into bonds, and yields are going to go down because in the selling pressure, they're going to go to safety into safety of bonds, and get that's going to be a negative force for IWM if I'm right. And typically, you get a bid up in technology, but I don't think that's going to be the case. I think everything's going to sell. So let's keep that in mind. Um, I'm not going to make the assessment, the analysis that as if yields come down, then tech's going to go higher. I don't think that's going to be the case. I think we are we're finally to that point that this market, after like 10 months since a major correction, that it's well past due for a much more deeper sell off, in my opinion. Okay. Please leave comments below, like the video if you like it, and tomorrow let's try to make some money together. Okay. Thanks a lot.